So about 2 weeks ago, I told you guys that if Lululemon could not stay above 175, then look for a 9% pullback to 162. Take a listen. Current support for the stock is going to be at 175. If that level breaks, look for a 9% pullback to 162. So looking at the current chart, you guys can see that Lululemon did fail to stay above 175, and as a result, the stock did end up pulling back to 162. With that said, if you'd like to know where the markets and your favorite stocks are headed next, then consider subscribing to the channel. Now, 2 days ago, I told you guys that if Tesla, ticker symbol TSLA, could stay above 373, then look for a 4% continuation to 415. Take a listen. Upside, if Tesla stock can stay above support at 373, then I want you guys to look for a 4% continuation to 415. Guys, when it comes to technical analysis, there's no other channel like this one on YouTube. So if you'd like more accurate price predictions, then consider subscribing to the channel. Now, at the time of this recording, the dollar index is currently down over 0.72%. If this low gets broken, then I want you guys to look for the index to come all the way back down to $95. And based on my analysis, this could be a potential reversal point. Now, Bank of America says that Tesla bigger picture upside story is still intact. Take a listen.
Next guest doesn't see that rally ending. Let's bring in Paul Sienna, head of technical research at BofA Securities. Paul, so the technicals suggest to you that this stock still has room to run from here.
Absolutely, they do. Over the last couple of years, Tesla's share price was forming a very nice triangle pattern, which resolved to the upside late last year. And since that peak in late 24, it came back down, retraced part of that, and found a lot of support and formed a smaller bottom pattern that says, you know, the bigger picture upside story is still intact.
And how much higher is that upside based on what you see? $700, and if so, when?
Yeah, so our bigger picture target from that, you know, long triangle pattern over the last few years does measure to about 700. And given the size of that consolidation, taking roughly almost 3 years, we tend to use Fibonacci ratios to project forward when that could occur. And a few different measures say as early as July 2026. Some linger into the first quarter of 27.
I mean, Paul, I'm sure that you know, this particular pattern was not the same setup as past times when Tesla has had one of these runs. But if I look at a 5-year chart of the stock, there have been a handful of times when it really accelerated to the upside and put in a pretty serious peak. It hasn't spent much time above $400, really only a couple of months since first getting there a few years ago. So what would you look for to suggest it's getting overheated? It seems like the trend this time is just now turning as opposed to peaking.
Yes. I would agree with that statement wholeheartedly. And I think the first thing we can look for is new all-time highs, right? We're really not in a secular bull market, let's say, for Tesla's share price until it's well past $488 a share, which was the prior peak. So, you know, with the move that's happening this week and over the past couple of weeks, you know, in forming smaller bottom patterns that complement those longer-term charts you've mentioned, Mike, I think the shoe fits that, yes, that $700 target is still well in play.
And in terms of the broader market, Paul, how are we set up going into the Fed meeting, going into the second half of September here? Obviously, clicking to new highs, market's not really kind of doing anything wrong if I just eyeball it. But what can we expect in terms of how it might trade in relation to the coming period?
Sure. So we've had upside targets on the S&P this summer of about 6,500 to 6,625. So I see the equity markets in a mature place, having reached these kinds of targets. So one of the things we advocate for is if you are long and have been long, to think about maybe hedging some of those longs in the options market. If you're in the position where you think the S&P is going to 7,000 and maybe that's approximately where it peaks out, well, then you have yourself a very convenient strike price to think about playing with. I'm a little concerned going into the Fed for a couple of reasons, Mike. One, because the last 10 days of September are notoriously and seasonally bearish. They're the worst 10 days in the market for the year. And actually, September 17th is the 10th day before month end. So it's perhaps just a coincidence.
Now, going into the rest of the video, I have some important levels for you guys to watch on ticker symbol SMCI, Super Micro Computer, and ticker symbol BBAI. Let's go ahead and start with SMCI, Super Micro Computer. So at the time of this recording, SMCI is currently down over 1.3% and is sitting on support at 43.60. If the stock can stay above this level, then I want you guys to look for a 9% pullback to 40.81. And if 40.81 gets broken, then look for a further pullback to 37.20. And from current price, we're looking at a decline of 16%. Now to the upside, if SMCI can stay above current support, then look for a 11% run to $50 per share. And if the stock can get above this level, then look for a further run to 52.27. And above 52.27, the bull's next target is going to be at $55. And from current price, we're looking at a return of over 24%. Let's now take a look at BBAI. So currently the stock is up over 16% and is running into resistance at 594. If the stock cannot get above this level, then I want you guys to look for a 5% pullback to 564. And if 564 failed to hold as support, then look for a further pullback to 524. And from current price, we're looking at a decline of 11%. Now to the upside, if BBAI can get above 594 and stay above it, then I want you guys to look for a 10% run to 660. And if buyers can get the stock above 660 and keep it above there, then look for a run to my price target at 729. And from current price, we're looking at a return of over 22%. With that said, if you guys like today's video, go ahead and leave a thumbs up. And if you're currently watching and you're not yet subscribed, do consider subscribing. As always, thanks for watching, and I'll see you guys in the next one.